Season like we've had this year mean for the companies that pay out for the damage. The insurers and reinsurers who are here to speak to me about that is Ingrid Hobbs. She's a partner at Mayer Brands Insurance Group. I guess you're watching the weather forecast more nervously than the rest of us.
Absolutely, and because I'm from Ireland as well, so I'm watching really closely to see what's happening back at home.
All right, the folks okay, as far as you know?
They're in Portugal, so they're fine.
Oh, that's good. So how bad a year has been? And we've just been talking about this. I mean, in terms of the payouts, worse since '05, but in terms of the actual weather, worse since further back, you think?
Yes, looking back at the history today, 10 hurricanes in 10 weeks, so that is the worst since 1893.
Crikey.
Yeah, it does suggest there's some global warming.
Was the insurance industry as sophisticated then as it is now?
No, but it has always been prepared to pay cat losses, and historically it has paid significant amounts. I mean, it's not like we haven't had extreme weather patterns before, but this is just a lot in a very short succession.
So in terms of Harvey and Irma, I think Lloyd's of London has said it's going to cost them £3.5 billion. Have we got any readout yet on a feeler? Is it too early to say?
No final figures. They're saying that £3.5 billion is the estimate, but of course that's just for the insured losses. Lloyd's are only looking at their own exposures there. There will be a lot of US carriers, local carriers, which will be taking the front line hit, and then a lot of those will be reinsured by the big reinsurance companies. So that is another exposure, and reinsurers are seeing their reinstatements being called on. So when the losses have gone through once, the limits are reinstated for the next hit. And my understanding is there are people who are purchasing more reinsurance top-up already.
Goodness. Now, I mean, there is an argument, though, for saying that this actually might be quite good news for the insurance industry because premiums have been coming down because of the lack of action in recent years. A lot of capital's come in, depressed returns. Yeah. Is that the case?
Well, it certainly has been a soft market for a long time. And clients of mine would be saying regularly the market is very soft and there's an influx of capital. This sort of an event tests the mettle of long-standing insurers, and reinsurers particularly will see an opportunity perhaps to harden the rates a little. The concern there, of course, is they pass that cost to the insurers, who then have to pass it on to their customers, so we could see premium increases as well.
All right, Ingrid Hobbs from Mayer Brand. Got to leave it there, I'm afraid. Thanks very much for joining me. You've been watching